Hi, this is George. In this video, we are going to see about double spread in Banknifty with adjustment. So we generally don't see so much of adjustments. So from this video, I'm thinking like I'll put some adjustment if possible when and where. So this when we say about adjustment again, there was not going to be very so much like so many of adjustment for every now and then movement in market, which usually happens. We are going to have our adjustments very simple, and because as we are going to do adjustment, obviously you know that for doing adjustment we need to keep some additional capital. So from base trade you need to have some at least 50% to maybe 70% additional capital for adjustment. So, and one more thing is like here the drawdown can also be more because of adjustment. When we do for adjustment, when we think like okay, market is going to is trending and we'll be selling the opposite side or something. But if suppose again market reverses, then we'll be in a very big loss. So these things we need to understand before doing any adjustment, because this the usual risk defined strategies which we know are always like defined risk which we no one may enter. But now due to the adjustment, the risk the defined risk can be more. So please understand that before taking these trades. So before getting into the video, please do subscribe to this channel. Also, there is a Telegram channel. If you want to get interested, if you're interested, you can join that. And also, people who like the video can like it. Let's get into the video. So as I said, like initial capital required in the strategy is like going to be 1.2 lakh. If we are doing adjustment, if it is required, then it is going to be 1.65 lakhs. As I told you, it can give you a very big loss as well. We are going to do spread in both sides, C and PE, that is a double spread, or it is a kind of like a iron condor, kind of something similar to this. Manual backtesting for whole of H1 I have done in Banknifty weekly options. Here again, when I say adjustment, it is like only one simple adjustment. It is going to be a like kind of 3-leg adjustment, but it is like only one adjustment which we will be implementing all 3 legs at the same time. So it's not going to be very tedious one. So it's a very simple adjustment, and it is suitable for working professionals and part-time traders. Disclaimer: this is only for education purpose. Please do your research before taking any trade. This is not a recommendation, but just my view. So entry. So you could have seen my double spread video. If not, I will be posting that link in the description. You can see that. Just like what we have seen in the double spread strategy, we are going to implement the same strategy here. We are going to enter the previous Thursday at 9:30, and we'll be exceeding on this same day at 9:30. Sorry, expiry day at 9:30. The strategy here is like we'll be like buying one lot. In that video you would have seen, but here we are going to do 2 lot, because the adjustment part is going to be in a ratio kind of thing where we need to have at least if this has to be 2 legs, 2 lots each. So here we are going to buy 2 lots of OTM call and put 500 points away from strike, and we'll be selling 800 points away strike OTM call and put. So sorry, this example is wrong. No, this is correct only. Sorry. So say if Banknifty is 38,000, we buy 2 lots instead of one. It is two. 2 lots of 38,500 and 37,500 we'll be buying, and we'll be selling 38,800 call and 37,200 put. So adjustment, we are going to do a ratio spread on opposite side of market movement. Say suppose if market is being bullish, then we'll be taking trade on put side. If market is bearish, then we'll be taking the trade on call side. So the opposite side of direction we'll be taking once we are profitable. Then I'll explain what we are seeing in the Opstro application. So what we do is like we have to take these 3 legs, buy, sell, buy in the ratio 1:3:2. First leg will be the break-even zone that I'll explain. The other 2 legs will be 500 strikes each, difference from each of the other legs. So that is the criteria here. So once we do that, this is the strategy. So we can see the summary here that I have given with adjustment, without adjustment. With adjustment, you can see like we would have made 24% return on investment for the last 6 months, whereas with adjustment, without adjustment, we have made only 19%. It's not a very big difference, but still people say like taking the trade on Thursday until the next Thursday, should we sit idle? Because human tendency is like we need to keep seeing market and we need to do so some adjustment, or else we are not satisfied and we don't think that ourselves as a trader. So for them, at least you can take at least one adjustment, and maybe you can relax a bit if market is going in your favor. So I'll explain 2 cases where we are going to get profit, like profit in the sense, even I'm highlighting this minus 1503, which is not a profit, but it is better than the same thing which we are seeing minus 4644. Here it is 1900 profit, whereas here it is minus 1734. So these two cases I'm going to explain in abstract. So first we'll take June 23rd. So I have already put this June 23rd here. Bank Nifty's spot is at 33,700. So 500 points away is 33,200. We are going to buy two lots. 32,900 will be selling two lots. 34,200 will be buying two lots. 34,500 will be selling two lots. Now the next day we can see market has went bearish and we are in profitable zone. This is what I meant profitable zone in the previous few minutes. So this is what I am saying. So now we are going to buy trade in call side. So we are going to do buy in the ratio 1:3:2 for call, where break even is kind of 32,900 around. So we will be buying 32,900 call option. And one more thing, you please may see here, like break even here is like the upside, it is 33,041 from where we are now. So 33 and 50, 33,050 or 40. So once we do adjustment, you can see how our break even is changing. What did I say? We are going to buy 32,900. So 32,900, we are going to buy one lot. 33,400, we are going to sell three lots. 33,900, we are going to buy two lots. 1:3:2. So once we do this, you see a payout graph chart like this, where this side it is like completely we are protected till 33,490. Last time you saw it was 33,50, but now as market has moved this side, we feel like probability of market reversing is more, but now we are getting more buffer of 450 points. Till then we are not going to lose anything, or else we'll be losing very big amount. If you could have seen, you can let's just like rewind and see. Max loss was somewhere around maybe 8,000, I guess. But after the adjustment, it is going to be 20,000. As I said, like loss can be more if it goes to this zone. This zone again, it will be like lesser, little lesser. But still, here from 33,500 to 34,500, this 1,000 point range, it is going to be a very big loss for you. That also you need to remember. But from where you are, which is 32,400 till 33,500, you are protected. So that is a good thing here. So now on the expiry day, which is 23rd, you can see like market, as we saw, it is like reversing, and you see like it is ending in 1,900 profit. So that's what I have given here. If you have not done any adjustment, you would have ended in loss of 1,700 odd. So similarly for the next case, we will see June 30th. I'm just explaining two cases. If you have time, you can see for the others as well. 3300 is a spot, so 32,600 we are buying, 32,300 we are selling, 33,600 we are buying, 33,900 we are selling. So our payoff chart is going to look like this. So from here we'll move on next days. So break even is breaking here. Sorry, we are profitable zone we are going. So here we can do somewhere around 33,800 in the reverse, which is put side. So 33,800 will buy. One lot. 33,300 we are selling three lots. 32,800 we are buying two lots. So now on expiry day, which is 30, you can see we are ending at loss of 1,500, whereas it would have been loss of minus 4,600. So though we are not making profit, but our loss has diminished. So this is the way we need to do. I have given I have highlighted other case also, where market was range bound and it has not moved anywhere, so there was no chance of doing any adjustment. So many cases would be like that. So you can see the second case, April 13th. This is also one, I think, April 21, April 28. Most of the cases are like that. Not most, but many cases will be there definitely. And few cases will be there where you would have made not very big loss here, like say September 1, without any adjustment, it was be only 4,800 loss, but after adjustment, it has become 9,000, 8,000 loss. As I told you, maybe market would have went somewhere here. It would have been a very big movement. So you are entering in a very big loss. So this is also there. So please keep that also in mind. So accordingly, you can trade. If you say, suppose if you are like, it is a very big environment or very big news is coming, then maybe you can avoid this adjustment, because if there is going to be a very big news or if the VIX is more, then definitely market is going to move. And if market is going to move, it is not going to be range bound for the ratio spread in this scenario to be in loss. So you'll be in profit. So you can accordingly do as per your wish. So, but overall, you can see like this strategy has performed better than without adjustment by 5%. Though 5% is not a big amount, still it is what RD or FD is giving for a whole year in a bank collateral. So consider that and you can trade accordingly. So the next week again we'll see some other adjustment or education video. Until then, bye.